So most of you know me, and my name is Carl Nalter, for those of you who don't. And I want to firstly say a big thank you and congratulations for being brave and joining us today. In these uncertain times, bravery is definitely needed, and we're co-creating something. So a big thank you to all of you who willingly jumped into this experiment with us. Special thanks to Justin and the i2 team, who immediately said that they would be our headline sponsor, which enabled us to experiment and make sure that this could happen. So a big thank you to Justin and his team. Normally on a Tuesday, they'd be hosting a couple of hundred brokers. So thank you also for parking that this Tuesday. Thanks also to our other sponsors, Marsh and E&S, and also the contribution from our industry bodies, ISA, FIA, and Zaire. Look forward to hearing from all of you, and thank you very much. A special thanks to Leah, who's joining us for performance. First time she's doing something like this. I think first time many artists would be experimenting. That's a little bit later. So we're going to look forward to that. Special happy birthday to Josie Dougal, who is one of CN&CO's founding partners. She's married to a broker based in Natal, so she's smart, and we wish her a really happy birthday, Josie. And she told me to say that, so that's why I did it. We've got a 1,000 Rand prize going, which we put into your Easy Equities account. And if you already have an Easy Equities account, you can get 2,000 Rand. And you simply have to do social media posts sometime during the day, hashtag InsureTalk, and Simon, our MC, will be choosing the winner. So simply hashtag InsureTalk, mention one thing that you've learned today that you'd like to share with the community, and Simon will pick a winner in the course of today. So that will get you up to 2,000 Rand in your Easy Equities account. Appreciate any feedback that you guys might have. As I said, this is an experiment. We've done some texting. The CN&CO Events team have been great. And so hopefully all will go well, but who knows? So yeah, your thoughts would be really appreciated. To help us make sure that things go well, I'm not going to be the MC. I've conned Simon Coleman into doing that job because he's brilliant at it. He's also well known for being the chief judge on Insurance Apprentice. And as you know, from there, he takes no cut. So if anything goes wrong today, it's Simon's fault. You can blame him. And without any further ado, I'd like to hand over to the legend, Simon Coleman, who is going to be our MC today. Thanks very much, Simon.
Yeah, thank you, Carl, and good morning to everybody. Thank you for tuning in. I'm certainly looking forward to this. I haven't really done any MCing on a VC platform before. It's kind of difficult without having an audience that you can make contact with, and I think all of the speakers will appreciate that as well today. So as I would normally do if I'm emceeing an event, of course I would take you through some housekeeping. So I thought this was a good opportunity to just explain that the bathrooms are somewhere near to you in your house. Hopefully you know where those are. Coffee is really available whenever you'd like it. And there is a smoking area, as long as you can find something to smoke in South Africa. And you can feel free to do that whenever you like. On the bathroom issue, if you are watching this in the bathroom with some cigarettes and some coffee, well, then you don't really have to move around at all. And I think that'll be fantastic. So yeah, without further ado, I'm going to introduce our first speaker. I know many of you do know Dr. Graham Codrington. He's an award-winning speaker, author, advisor on the future of work. He's a futurist, and I love this on your LinkedIn profile, Graham, an unlearner, which I think is fantastic, something we can all learn from. Graham holds a number of degrees across a broad spectrum of study, including theology and sociology. I have to say, Graham, I had to look up what an MDIAC, an MDIAC degree was, because my daughter actually told me it stands for my dad is a cop in slang. So apparently it's not that. Graham, of course, has a doctorate in business administration as well. And today he's going to be taking us through the state of South Africa in a post-COVID era. Over to you, Graham.
Thanks, Simon. What a great intro. I'm speaking at a number of conferences via webinar these days. That's the best MC opening I've heard in a while. Please, if you are on the loo smoking and drinking at this stage of the morning, please don't turn on your video at any stage. Just another reminder, we do have the chat facility. You're able to send chat messages to the panelists. That's to all of us who are speaking. And I'm certainly just keeping an eye on the side of my screen. So if you have any specific questions for me in just the 10 minutes I've got, you're welcome to pop those in. I'll try and answer them if I can. But the team at InsureTalk asked me to talk about life after COVID. And obviously, there are two ways to answer that question. The first is the longer term way, and I'll get to that in a second. The other is the more immediate. Our time horizons have really come in, haven't they, over the last few weeks and months. And so I thought I'd start by just talking about what is it going to look like after lockdown. Those of you who heard the talk last night, in an update of some of the stats and the data that is driving the government's decisions. Well, I suppose you were as impressed as I was in terms of the expertise that we have in this country. And the fact that we do not have a lot of deaths, the fact that our hospitals are not being overrun, that's the key metric at the moment. Well, that is impressive. Maybe we've been a little bit lucky, but I think it's also got to do with some really good decision making that's come into play. However long lockdown lasts, whether it lasts until the end of the month or has to be extended a little bit because we're beginning to see spikes in the infection rates, I think that the first thing for us to understand about life after COVID is that lockdown won't end and you'll go back to work the next day. Until we have a vaccine for COVID-19, for this coronavirus, we are not going to be able to give up social distancing. I prefer to call it physical distancing. We should be socially connecting, but physically distancing. But until we have a vaccine, we can't give up that distancing between us. And the vaccine is 12 to 18 months away. In the best case scenario, it might take even longer than that to get it properly certified and produced and distributed around the world. So for the next 12 to 18 months, no matter what the government does with a lockdown, you can't have people closer than 2 meters apart. So if you and your company have to go back to work, what does your office space look like? Are people 2 meters apart? Do you have enough space in the canteen for lunch breaks, for example? If restaurants were to reopen, they probably can only have half the number of tables in a restaurant. And for some restaurants, that means it's not economically viable to open in the next 12 to 18 months. What about airlines? In business class, you're going to have to leave every other seat empty. And in economy class, you're only going to be able to put one person in a 2 meter radius. So that's basically one person per row in the A seat and then the F seat and then going backwards, skipping every other row. Is that economically viable for an airline to be flying a plane that empty? Countries that are coming out of lockdown have got quarantines on incoming international arrivals. So you arrive at the airport and then you have to go into 14 days state facility quarantine. And then coming back to South Africa, you might have to be 14 days again. The point I'm trying to make to you is that a lot of people are sitting back right now and saying, well, we're in lockdown, we kind of suck it up, we do a few Zoom meetings, we put everything online for a few weeks, and then sometime in May, at worst case scenario in June, we go back to normal. I hope you were sitting down, because my message to you is not necessarily a motivational message this morning, because I don't think there's a normal to go back to. We certainly are not going to go back to any form of normal anytime in 2020. And for most of 2021, our world is going to look very, very different. We are going to want to keep a small geographic footprint. We are going to want to physically interact with as few people as possible, even if lockdown is over. So don't just look for the end of lockdown. Look for a 2-year period in which we have very harsh restrictions, even if they're not legally enforced, we ourselves will enforce them. I don't know if you know of anybody who's had COVID-19. I have 3 friends who have had it, all fantastically survived it, including, by the way, somebody in their 70s, which is really good news. And all 3 of them say this is a beast of a disease. It is not just like flu, but just a little bit worse. It is a nasty, nasty thing for those people who get it and get the severe symptoms. So that's the first answer to the question, what is life after COVID like? The second answer, of course, is the longer term answer, and that is sort of 2022 and onwards. And here again, I think we are going to see remarkable changes to the world around us. So for example, right now, America is in a world of pain at the moment, and they're not going to get out of it anytime soon. For those of you who watched the Prof's presentation from South Africa last night, and then watched Donald Trump last night, in comparison, I don't want to make political points except just to compare and contrast the amount of data that was put out, the amount of insight, the amount of scenario planning and understanding. In America, they're still arguing about trying to get back to work in 2 weeks' time, while they're having more than 1,000 deaths a day, and new infections are still on the up. Basically, America hasn't locked down yet, hasn't understood that you can't just beat this with wishful thinking. And again, I'm not trying to score political points there. What I'm trying to say is America now has created such a big problem. Italy showed them what would happen. Spain showed them what would happen, that they're going to spend months trying to get out of it. Whereas on the other side of the world, China, South Korea, and others, yes, are kind of battling a possible start of a second wave, but generally are open for business. Here in South Africa, we are going to be open for business again before many other countries are, certainly before most of Europe and America and South America. And there could be a massive global shift in economic powers. We're open for business. We want trading partners in South Africa. We want people to supply us with goods and services. And we might have very few options. We might have to look to South Korea and to Vietnam and to China, where maybe we haven't looked there before. And this could change global economic paradigms. I think, from what I can see of the Chinese government and what they're doing around the world at the moment, that they fully realize this. And this could see a massive global shift in the next year or two in terms of economic alliances and trade deals and so on. Does it put Brexit into question at the moment? That's now a question on the cards again. Brexit hasn't officially happened yet. And maybe this will turn the tide on that. We honestly could see with an American election in the middle of this crisis later this year, we could see massive shifts in political and economic power. Let's bring it closer to home. We were having an NHI conversation for the last 2 or 3 years, bringing in a national health system. Those people who were opposed to NHI, well, now they've been shown exactly why we need an NHI, right? They've been shown that the richest people in South Africa, with your private hospitals and our private medical aids, we are as protected from a national health emergency. We're only as protected as the poorest person in the poorest shack in this country. And we need NHI so that we are all protected. I think in 2022 and 2023, we'll come back to that NHI conversation when we can afford it again, after we've sorted out the financial crisis we're in at the moment. I think we might be in a very different space in terms of the conversation we had. One final example, and then I'm done. We are in the middle of the greatest experiment in workplace operations in the history of humanity. The greatest experiment in the future of work anyone could have even possibly conceived. This whole work from home, let's do it online, let's stop traveling experiment. What happens if it works? What happens if we all love this? What happens if Simon never travels again? And what would happen if around the world, millions and millions of people say, I'm not traveling, we're doing conferences online, education shifts online, our relationships move into a different space. The point I'm trying to make right at the beginning of this conference, and hopefully setting a scene for a lot of the other conversations, is there is no normal to go back to. The normal we had, in fact, in some instances, is part of the problem and why we are where we are. So we live at a moment now in history where we have the greatest blank slate possible. Let's not waste it. And I think that leads nicely into what Justin's going to talk to us about as well. Thanks. Simon, back to you.
Thank you so much, Graham. That was extremely informative. I think you've really encapsulated pretty much everything that we're all thinking about. Particularly if you're running an SME, you wonder what that new normal is going to look like. Before I introduce Justin, I just want to mention that, of course, you can earn CPD, or you will earn CPD today, but don't think about sneaking in and out. So maybe you do want to take that coffee in the toilet with the cigarette, because we are watching you very carefully. No, we are obviously, we're awarding 1.5 CPD for today. So you would have already registered with your ID, and we are keeping a register of the sign-ins and sign-outs. So if you want to earn all of those points, you have to stay with us until today's event concludes. And yet, once again, I'd also like to thank Marsh for their sponsorship, and of course, I2 for being the lead sponsors today. And that, of course, leads me to Justin Naylor. I've known Justin for many years. We met back in prison. What's it now, Justin? Probably 8-9 years ago. I was, of course, a warden, and Justin was an inmate. But seriously, Justin is, of course, the managing director of I2 Special Risks, as I mentioned, key sponsors of today's event. He holds a BCom honors degree from Stellenbosch, and of late is partial to wearing only his underwear in the office. And I'm sure he'll show us that during his presentation. Justin, I'm going to hand over to you now, and yeah, let's learn something. Thank you.
Great. Thank you very much, Simon. And I'm going to just share my screen if I can, because I've actually prepared a bit for this, and I've got a presentation to share you all. So Simon, you want to just give me the heads up? Can you all see that? Is that nicely shared on the screen?
Yes, we can see it.
Great stuff. So thank you very much, and I'm going to get straight into it. So first of all, to the team at CN&CO and to Graham and Simon, who've spoken before me, thank you very much for the build-up and the introductions, and it's really good to be speaking here today. So I'm going to talk today, the topic of my talk is never let a good crisis go to waste. I did a similar version of this talk a few weeks ago in my first ever webinar, and I want to show you, if you listen to me then, this is a very different presentation, and I've tried to add a lot more to it. So please enjoy. I'm going to kick off with some of the initial thoughts that I had previously when I spoke, but then I've got some very different views, and also mostly on the way forward and some of the trends that I see going forward. So let me get right into it. And as Graham said, I think this is a really good opportunity to rethink, and we do have a blank slate into how we see the world going forward. So if you look on the screen here, I've put up a group of a couple of different companies, and I'm sure you will agree that these are all world-leading brands and leaders in their sectors. And the question really is, what do these companies have in common? So I'll tell you one thing that they have in common, and that is pretty simple. These companies were all born during a recession. So these companies all were born in times pretty much like this, that were really challenging and difficult times. And I believe that this is the reason that some of these companies became so successful and were so far ahead in dominating their markets. One of my favorite people in history is Winston Churchill, not only because he liked to drink very fine champagne, Paul Roger, but because he was a very smart man, and he came up with many, many famous quotes. And this is one of my favorite quotes of his, and it's certainly one that I've seen around a lot on the social media. And he said, never let a good crisis go to waste. And I think that's part of what we're talking about today. But what exactly did he mean by that? And really what he meant is, during challenging times like this, we have a status quo that is the weakest. And for people that like Ronald Gall that might be listening, or Rob Ferguson, what is a status quo? Status quo is really quite simply, what is the day-to-day normal of our daily business and lives? And the opportunity here is that our day-to-day normal is at its absolute weakest. And it possibly, in a time like this, doesn't even exist. And this is a really good time to look at your day-to-day normal and think about how do you want to change it. So I want to show you another group of companies that are coming up on the screen here as I'm talking. And these are some different companies, and they're slightly different to the first group of companies and possibly more relevant to the situation that we're in now. So let me ask you the question here is, what do all of these companies have in common? And they're a little bit different, but what they had in common is these companies weren't born in a crisis, they grew in a crisis. These companies all were established and relatively successful companies, but mostly during the 2008 financial crisis, they made some fundamental changes to their business and became even stronger and very successful companies. I like to use the example of Starbucks, and just to give one example. Starbucks was a business that I think was representative of most companies in our current capitalistic world today. They had a very simple mission, and that mission really was, in all the leading cities in the world, they wanted a Starbucks on every single corner. Their business model was built purely around how many Starbucks can we open up in the main cities of the world. And they went about this fairly successfully, and they built a huge business of many, many stores and many employees. But then what happened? The 2008 financial crisis came, and they suddenly realized they were in major problems. They had to close down many of their stores, and they had to retrench 12,000 people. So that was obviously a really tough time to start for Starbucks, but they also used the opportunity to rethink their business model. And they rethought it by not having as many stores, and they did a few things to fundamentally change their business. They introduced loyalty cards, so customers, every 9th coffee they bought, they got the 10th one free. And this was the time when consumers were feeling the crunch, and it was a way that consumers could get more bang for their buck. It was also a way that Starbucks could get customers to come back for repeat purchases during tough times. And I don't think there's a coffee shop, one of the big coffee shops in the world today, one of these big chains, that doesn't have some form of loyalty card. Starbucks were the first. The second thing that Starbucks did is they introduced Wi-Fi into all of their coffee shops. And for me, this has fundamentally changed the way we see a coffee shop. Because these days, I'm sure you'll all agree, you don't just go to a coffee shop to buy a cup of coffee. The coffee shop has become, in the words of Starbucks, a home away from home, and a place where people go to meet, have meetings, log into Wi-Fi, check your free data, a gap between meetings where you can go and do your work, and maybe some time to catch up with friends. Oh, and by the way, while you're there, you can get a really good coffee. And I just think that Starbucks is a really good example for us to be thinking about now as to how do we use a crisis to fundamentally change our businesses. Okay, so here's that was a recap of a previous presentation that I did. But here what I've tried to do is I've looked at 6 trends that I think will be sparked by this COVID-19 crisis. And I want to just emphasize, these are just purely my insights. I'm certainly not as clever and as insightful as Graham Codrington. I haven't done a lot of formal research, but what I have done, which is interesting again, is I've taken some time. And time is something that many of us haven't had in the world before COVID-19. I've taken some time to think and look around what's going on around me in the world and in this insurance industry. And I've tried to package what I see going on into a couple of trends, 6 trends to be specific, that I think we're going to see in how the world changes after COVID-19. I've tried to give them some catchy names, so hopefully you will remember some of them. And these, I think, are ideas about how people may adapt and how businesses should be thinking. How do you adapt to the world changing around you? So let's get into some of Justin's insights sparked by COVID-19. So the first one, I think, is probably the most important. And really what that says, if my beautiful face is covering up some of your screen there, is the first trend that I see is don't be a dinosaur. And this really for me has been amazing to watch during the start of this lockdown period and this COVID-19 crisis. Because really, I do believe that if you're a business that is not learning or adapting every single day, you are slowly going extinct. And I think that this is probably something that is just being accelerated by COVID-19. I look at my own business and our business as an example. We were a pretty young and fresh brand. We were doing things really well. We were probably perceived in the market to be forward thinking. But the reality is we were a pretty traditional business, based on relationships, being experts in technical understanding, but pretty simple and straightforward in the way that we did business. And this process has really forced us into, in a matter of 3 days, getting 130 people working from home. This is a debate we've been having for probably more than a year. Should we allow more flexi hours and people working from home? Well, guess what? When forced, we weren't dinosaurs and we changed within 3 days, and we have our whole team working from home. And it's actually working really well. We've also explored digital training. We were really good at having these out of the ordinary experiences and good training. And we thought, well, we'll get to online and digital training someday when we need to. We know we need to do it sometime. But guess what? This process has forced us. We are now having digital training and webinars like this all the time and every week. And it's been a fantastic experience. Obviously, there are industries like the insurance industry and all of us that are luckier than others. And we've been able to carry on relatively uninterrupted. I'm of course aware that the economy is going to be challenging, and this is not good for anyone. But I think you will agree that for some industries, it's going to be tougher than most. If you're a game lodge relying on foreign tourism and travel, you no doubt are in for a difficult time. Or if you're a restaurant and you're closed down by law during this time, you're in for a really difficult time. But I certainly do think that there is an opportunity for businesses not to be dinosaurs and think differently. Probably a good example for me is I've been spending a lot of time at home with my kids, and I've been watching these virtual game drives of Thunder 2 and Ngala, and they've been absolutely incredible. And I know that these businesses aren't replacing their usual revenues of foreign tourists paying $1,000 a night. But what I have noticed is they're getting to thousands and thousands of viewers all around the world. I was watching yesterday morning and I saw people commenting from India, America, and South Africa. For a family like mine, I couldn't afford to go to $1,000 a night game lodge, but it's been a great experience to log in and watch. And I think this is a perfect example of a business or industry that hasn't got it right yet, but here's an opportunity to look at your business model and how do you change it. And there's absolutely a way to monetize digital viewers around the world with advertisers and sponsors and experiences. And I think hats off to the game lodges for really trying something and seeing if they can evolve their business models. And a restaurant is another good example. And I really do believe that at restaurants, it's going to be a long time, as Graham said, probably more than a year before our restaurants are packed and buzzing and full. So those restaurants better be thinking about, how do I set up a dark kitchen? How do I supply food and ingredients and home recipes? We've seen a flurry of home cooks during this time. How do I supply ingredients and home recipes and home cooking to people around me? Because I'm not going to survive as usual. This is not business as usual if you're a restaurant. So I think the message here is, whatever business you're in, you can't be a dinosaur. You need to think differently, spend time thinking, and be creative. And I think you'll find some interesting opportunities. So the next trend that I've picked up, and I think Graham touched on this a little bit, but I've called this trend, there is no I in team. And really what I think the message for me is we're truly living in a global world, and we are all connected. Whether you like it or not, when there is a virus that starts in a city that to most of us is probably completely unknown or relatively unknown, it has an impact or potential to impact everyone in the world. When you're someone like the US and you have a leader like Trump and he makes a decision that we don't agree with, it has an impact on the world and us. I think closer to home, I started out lockdown feeling relatively happy. I was pretty secure. I have a nice house. I'm with my family. We did some online shopping at Woolworths. It worked the first time. And lockdown started off being pretty good. And I started to think about, this actually isn't so bad. We can get through 3 or 4 weeks and we'll be fine. But then I started to think about those less fortunate than me. I started to think about, what about those people in the townships? How are they doing sitting in their shack compared to me in my beautiful home with Netflix and my family around me and online shopping? And then I started to realize that whether you're in Sandton or you're in Soweto, we're all connected. There's no such thing as a bubble in the world these days. And you actually can't, for a sustainable period of time, live in a bubble. So the message from me on this trend is we need to care about what's happening in the world. We need to care about our communities, and we're all in this together. We need to beat this as a country all together. My next trend is quite a nice one, and I really enjoyed thinking about this. And my next trend that I see happening, and I'm sure if you're watching social media or you're following social media, I'm sure you'll be getting a sense of this trend. And this trend is local is lekker. Because I think for the last year or so, or actually more, the last 8 or 9 years, many South Africans have been moaning a lot about our politics. And probably this is the first time since the end of the Nelson Mandela era that all South Africans have been as united behind our president. And I really must take our hats off to our president, Cyril Ramaphosa, for being an incredible leader at this time. And he has used this opportunity to unite the country behind him. But I think there's more to it than just being united around our president. If you listen to what Graham Codrington was saying, I think it's going to be a long time before we're back to life as normal. I don't believe that any of us will be going on overseas holidays or traveling out of this country for the rest of this year. So what are we going to have to be doing? We're going to have to be getting back to traveling local. I personally would much rather be sitting in a stone farmhouse in the Karoo than traveling through airports and going somewhere skiing or to the beach in Europe. And I do think we're going to see a huge trend of local travel. I also see a wave of great support for small and local businesses. And I really have picked up in the social media and in chatting to people, positive sentiment about now is a better time than ever to support local. And it's really important as South Africans that we don't buy from the big and international, and we try as much as possible to support the small and local craft and artisan businesses. And I think more and more we're going to be supporting people in our community. We're going to be restricted from traveling. We're going to be restricted from going too far out of our comfort zones, and we're going to have to get really involved in supporting the local businesses within our communities, and even supporting local tribes that are people that are gathered around a common interest or common theme. And I think if you take local is lekker to the absolute extreme, the ultimate local is lekker place is going to be people's homes. And already we've seen this proliferation of home chefs, home exercise, home entertainment with the kids, spending more time at home. And I think that this is a trend that is going to be really strong in probably the next 2 years. Local is lekker. So support local South African businesses is the message with this trend. The next trend that I have picked up and that I expect that we will be getting after COVID-19 is what I like to call keep it real. And if you're someone like Simon Coleman, we've mentioned him a few times, Simon Coleman has, to use him as an example, has probably been living what a trend was called 99 lives. He had an SHA, Joburg work life, he had a Cape Town family life, he had the liability guy life, he has a bit of a social media personality, he has different circles of friends through his kids in their schools. And actually, that's probably true for all of us. We're all living what's called 99 lives. And I think that this period of lockdown has really, certainly for me, made me sit back and think, is this really real? And is this what we want? Is this what's most important about life? And I think we're going to see a big rethink of keeping it real. We have these lives that are built up around social media, kids. Me personally, every single weekend, my weekends were packed with kids' sports and different social engagements. And it's been really lekker just to spend some time keeping it real, starting with my family at home. And I think we're going to see a change in trend where people aren't going to get FOMO, fear of missing out. They're going to get JOMO, where they're going to have joy of missing out. And I think it's going to be okay to say, no, I'm not up for that. And I think this is a real trend. The one thing that I've certainly missed a hell of a lot during this lockdown And I've really enjoyed actually a lot of it. I'm driving my wife mad at the moment because actually so often I just think, you know what, we're really so lucky. We've got it good. We're more fortunate than most. And I've got work. And I've actually enjoyed so much of this lockdown. But there's one thing that I've really missed, and that's real relationships. And I can't wait just to, with one best friend, have a braai and a glass of wine at a home, not too much, but just to have a real relationship. The team at R2, we got together the day before lockdown in a small kind of group, and the one thing that we all agreed as a team of R2 we were going to miss the most was just that real relationships work. And I think we won't go back to doing a lot less is more, but real relationships is a trend that I see is going to be really strong after this COVID-19 experience. My fifth and second last trend that I'm seeing is, and thinking about is people sitting back and saying, hey, what's this all worth? And I think that you will all agree that for the most part, many of us have been trapped in this kind of materialistic, consumption-driven world where everything is about growth and more and having more and doing more. And I think that this period where suddenly you're not out at the shops every week or every day, you're not buying things that you don't need, and you're just taking a step back about and thinking about what's really important. And I think that this period has been for many people a good period of introspection where we will re-question what is value in life. I think you'll get a big drive on being more sustainable consumption, more recycling, and thinking about, do we really need that new car? Do we really need that new item of clothing? I think we're going to re-question a lot of things. Another thing that's interesting is looking at your expenses. For one, my expenses have come down substantially during lockdown because I'm not wasting money on so many things that I'm living perfectly happy without. And I do think that we're going to get back to a phase of less is more and making do and being happy with what we've got. And let's be honest, all of us have incredible amounts to be lucky and thankful for. I think time is going to be the new money, and I think health is going to be the new wealth. And I really think people are going to sit and think about, what is it worth? It wouldn't be an InsureTalk today if I didn't mention a few things about insurance. So my last trend is really about the need for specialty insurance. And I think that this COVID-19 is a big wake-up call to insurance buyers and to the insurance industry. But again, like so many of these other trends, this is not a new thing, but I think COVID-19 is really just opening our eyes to the world that is around us and the world that is changing around us. So I'd like to draw your attention to the stat or the quote that is on the screen there. And I'm going to read it out to you because it's quite important to take this in. So if you looked at the S&P 500, that is the biggest 500 companies in the USA, so most of the biggest and most successful companies in the world. In 1975, 85% of the value of these companies was made up of tangible assets. So that is buildings, plant and machinery, motor fleets, stock, tangible assets that you can touch and feel. If you take fast forward to 2015, this percentage of tangible assets had fallen to just 16%. And that means that 84% of the 500 biggest companies in the world is made up of intangible assets. And that is assets like brand, reputation, intellectual property. What's interesting if you look at that trend, and that's a very scary trend, look back to just the South African insurance market as a simple example. 95% of the spends of the South African insurance market is on tangible assets, property and motor being the main two. So I think really what this stats tells me is that the insurance industry has not caught up with how the world is changing. As advisors and brokers, we're still going and we're encouraging our clients to buy property and motor and all risks and laptops and the tangible assets. But we're ignoring the fact as an industry that the world has changed and the value in companies is actually in the intangibles, their liabilities, their brand, their reputation. And I think that we need to wake up from this corona virus situation and say, wow, the world has actually changed, and here's a lens to look at it differently. If you look at the cover, unfortunately, most companies have not been covered in any way for this coronavirus. Yes, of course, the big global events like the Olympics and Wimbledon, they all are insured for communicable diseases and event cancellation. There are some examples where companies will have cover, potentially in directors and officers liability, and some extensions in business interruption is the big one. Most companies didn't have business interruption, and some companies may have limited cover. But again, for the most part, companies did not have cover for a pandemic like this because we just carried on with life as normal and we didn't stop and think about what can go wrong. And really for me, if you're a broker, the first thing that you should be saying to your clients is understand their business and then take a think and say, you know, what can go wrong? And myself included, none of us really expected a pandemic of these proportions. And as an industry, I think we need to sit back and think about what can go wrong. The biggest opportunity or potential for the next coronavirus type scale loss event is probably cyber. It's entirely possible that you could get a global hack that impacts Amazon Cloud or the web services or Yahoo or Google or Microsoft that impacts millions of businesses around the world. Yet, it still seems a hard sell to get businesses and individuals to buy cyber. So I'd really challenge all of the insurance industry, because we're in this together, to think differently about the risks that we face, what could go wrong, and how do we structure our clients' cover for these types of events. And again, I think COVID-19 is a big wake-up call that the multi-mark insurance policy is dead, and we need to start thinking differently about specialty insurance. And just on specialty insurance, I would like to just say, you know, if you're wanting to talk to an expert about different risks that are out there, I'd like you to think expert and think out too. And we really do believe as a business that we provide our clients freedom and security to realize their goals by sharing in their financial risks in these times of uncertainty. And I think that this is quite an appropriate vision or mission statement in these times. And we've been really looking back at this, and we really are thinking about our business and the cover we provide, and how can we start thinking differently with our brokers to say, okay, the world has changed, and let's start changing and adapting the cover we provide. I'd like to end off with this quote, which I really liked and I've used before, and really it says, the struggle you're in today is developing the strength you need for tomorrow. And I'd really like to leave you all over that. I know it's going to be a really tough time for many of us. I think as an insurance industry, we probably are luckier than most, but no doubt it's going to be really challenging in the next few months. But I'd like you all to use this opportunity to say, what are we going through now? Think about the trends I've shared with you, and let's build a stronger insurance industry for tomorrow. Thank you very much.
Thank you so much, Justin. That was extremely insightful. You know, I thought about the reliance that we have on technology. You know, when you were talking about cyber, and particularly if we were unlucky enough to be caught in the middle of a pandemic and a cyber attack, because I find myself right now, my lifeline to the outside world is really through my technology. So the other thing that stood out for me in your talk was really, I saw something on Twitter a week or so ago, and somebody had said, you know, who or what is most responsible for digital transformation in your business? Was it your CEO, your CIO, or COVID-19? And I think for most businesses in South Africa, at the moment, it's been COVID-19 that's kind of pushed us down the digital transformation channel. And maybe that's something that we should be thankful for. But yeah, thank you very much, Justin. And once again, thanks to R2 for sponsoring today's event. Our next speaker is Lizelle van der Merwe.
Sorry, Simon, I've just got a couple of messages to say that there are a couple of interesting questions in the chat. I don't know if you want to get to any of the questions.
I think, Justin, if you don't mind, if we can deal with those in the Q&A at the end, otherwise we may run out of time.
Sure, great stuff.
So if you can just make a note of those if they're addressed to you, and we'll deal with those in the final session. That will also encourage whoever asked the question to, of course, stick with us and earn that full batch of 1.5 CPD.
Great.
Our next speaker is Lizelle. She is, of course, the head of the CEO of the FIA. She holds marketing and management qualifications from Damlin and Henley Business School. And of course, the FIA really ensures that the voice of intermediaries, many of you out there, brokers, financial advisors, and investment managers, are professionally represented with the regulators like the FSCA, with government and other industry stakeholders. And that is, of course, key to the development and sustainability of our industry. And a benefit that really Lizelle has of being in lockdown and relying on technology is that she doesn't have to be here in person. So I'm going to hand back to Llewellyn now. He's got a pre-recorded message. Unfortunately, Lizelle couldn't make today's session. Llewellyn, do you want to roll that?
Good day. I am Lizelle van der Merwe, CEO of the FIA. Thank you for the opportunity to provide the industry with an update on actions taken by the FIA following the COVID-19 crisis. The FIA created a COVID-19 business update that gets sent to members every Monday morning. This includes all relevant COVID-19 information, including guidance notes to assist members with navigating their way through the crisis. The FIA sent a letter to National Treasury, the FSCA, SAIA and ASISA noting the following 3 points for stakeholder consideration. The sector plays a cross-cutting catalytic role across the entire economy, therefore consideration must be given to the role and the sustainability of the intermediary. Intermediaries in South Africa are largely made up of small and medium-sized businesses. Based on the OECD COVID-19 SME research, SMEs only have enough cash flow to cover fixed expenses every month, with another third running out in 2 months, placing millions of customers at risk. Product providers must take into account the financial impact on intermediaries when offering relief proposals. Most intermediaries do not have the financial reserves to withstand a loss of income for a period of 2 or more months. We approached the FSCA to provide us with a guidance note on essential services for FIA members. We requested the FSCA to consider extending the CPD deadline, as the FIA itself had to cancel many of our member meetings where free CPD training was going to be provided. In light of the discussions with the FSCA, extensions were granted in respect of various regulatory requirements, including CPD. Key individuals and representatives were granted an additional 3 months to meet their CPD requirements. The FIA has also sent a note to the FSCA requesting guidance on financial soundness. We have asked the FSCA to advise if the current circumstances being experienced as a result of COVID-19 qualify as an event that will allow FSPs to access their surplus cash in order to meet their financial liabilities. We are awaiting feedback from the FSCA in this regard. The FIA sent a letter to SAIA. Some of the points include: remuneration received by intermediaries is used to acquire and retain customers, provide advice, and ensure the delivery of services to both the product providers and customers. Intermediaries cannot earn any remuneration if premium was not received by the product provider. We suggested that specific consideration be given by SAIA members to assist intermediaries who qualify as SMMEs in order to support government's objectives of developing small businesses and securing jobs. We also suggested that the industry and government consider the merits of forming a risk pool to consider pandemics such as the COVID-19. In closing, we thank all stakeholders and members for their support during this very difficult time. Today, more than ever, there is a need for ongoing financial advice and support services. This is an opportunity for the intermediary to make a difference. Customers depend on you for guidance and support. Thank you.
Our next speaker is Vivian Pearson. Of course, she is the CEO of the South African Insurance Association, a vital role in our industry, particularly at the moment. Vivian holds a bachelor's degree in communications and political science. And I think what we're really seeing from all of our industry bodies is really a pulling together. I like the way that everybody's kind of been working on this and putting out some information that hopefully we can not only help each other with, but also extend to our clients. Vivian, over to you. I'm looking forward to hearing what Saia is doing about COVID-19.
Thank you very much. And I would like to greet everybody here from my home. It is nice and it's not nice. So as I think many of the previous speakers have mentioned, things have changed quite a bit. And it's how we react to this that will make us stronger getting out of this. So from a Saia point of view, yes, I can tell you I have never worked as long and as hard and as much, and I am a hard worker, and Saia does do a lot of things in the last 20 days. We have been non-stop working around the clock from about 10 days before the state president announced the lockdown. And really, the issues that we have tackled with at Saia was that we wanted to tackle as Saia and that we've considered is not only the current situation of businesses and individuals being impacted, many of them very much financially as well, for the moment, and especially by the lockdown scenario, however long it lasts. But also, obviously, the sustainability into the future, not only of the insurance industry, but also of the broader economy. Clearly, non-life insurance industry is very closely linked to the rest of the economy and all the risks on the ground and the growth in the economy, etc., which we obviously understand that this will all be impacted negatively going forward in the short and medium term, and hopefully, as Graham has said, and many of the other speakers have mentioned that as well, that simply life that as we know it will change. And there will be opportunities economically going forward that we would not have dreamt of happening now, and maybe sometime in the future. And I think that that's actually a good thing. So just to go into a little bit of details about what Saia has been doing, and I can tell you that I cannot cover that in 5 to 10 minutes. But to give you an idea, we certainly, as I said, started looking at this COVID-19 crisis from about 10 days before the actual lockdown, having been really very much involved in different initiatives in our country ahead of this, including, for example, the Public-Private Growth Initiative, which includes many other business sectors, through BUSA, as well as through various other organizations. So we started proactively and then also reactively looking at what the industry can contribute. Because we believe that in such a situation as we find ourselves in now, it means all hands on deck. It includes individuals, it includes companies, it includes, you know, all sorts of players, from government to business to the other social partners. So this is certainly has been Saia's approach for the last 4 or 5 years now. And it is also in view of that approach that we have taken this very seriously. So we reacted to, for example, a direct request from the Minister of Finance. We've been working very closely with National Treasury and the PA and the FSCA in terms of how the industry can assist in responding to alleviate potentially the impact of COVID-19 on policyholders and small businesses now, and also into the future, which we call the aftermath of COVID-19. And as Graham has said, this is not something that will pass overnight. So we understand that very much as well. So the board had a special board meeting on the 25th of March. Previously we were talking a little bit, I would call it in an airy-fairy way. What if we try this? What if we consider that? But then it was, we had to really pin down some specifics that we could offer as an industry. We divided it, the board divided this into what insurance companies should do as a basic contribution, which we call non-negotiables. And that's really to start, I suppose, at home. And that is to support, firstly, government, which I absolutely agree that we can be very proud of the leaders of our country, especially the state president, but the whole cabinet and lots of people are working non-stop at the highest and other levels in government to make sure that our response as a country is great. And I think that we can all agree that it is. So to support government in any way to make sure that the spread of the virus is curtailed, but we are also speaking about how to alleviate the pressures economically and the changes that we are expecting afterwards. So that is a first focus. Secondly, remembering that the SAIA board recognizes and SAIA knows this. We are not a regulator. We cannot tell all our members what to do. We have different types of members. I think the non-life insurance industry is so diverse. We have small companies, medium companies, big companies, traditional companies, companies who work through intermediaries, direct companies, very much specialist companies, as Justin had also referred to previously. So it is not it's not a homogeneous industry. And so what is suitable, a suitable contribution from one insurer is not necessarily suitable from another, and we want to recognize that. We also need to recognize that the stability financially or the sustainability of the insurance industry is really important, because there are lots and lots of things that insurance companies and the industry at large can do now that would be very good reading and impressive. But if it is not sustainable, such a company and the industry may not be in a financial position to, when people need it after this immediate crisis, the assistance of insurance cover and protection, that we won't be in a position to really assist them. So we are really looking at this thing long term, and we have advised our member companies, or encouraged and urged them to look at their own solvency and liquidity circumstances versus in what they can offer as a not business as usual measure, especially for policyholders and small businesses in terms of our suppliers in the first instance, who are negatively impacted financially due to the current lockdown scenario. So in view of that, I'm pretty sure everybody has picked up that many of our member companies have already offered certain relief measures and ways in which to assist policyholders and the suppliers in different ways. So, I mean, I think that what we asked our members to do is to offer any measures within their own, solvency and liquidity requirements as immediate assistance, but also thinking long term. So I think it is impressive that many of our member companies have already started offering these kind of things. But we must emphasize that we don't believe that a blanket approach is going to assist anybody in the long run. And therefore, our members are going to look at those impacted financially, due to the COVID-19 national lockdown in the first instance, on a case-by-case basis, so that so that the approach is sustainable. Right, I think I more or less covered all of that stuff. Over and above that, obviously, as I said, one needs to start at home as well. The insurance companies have undertaken to assist their staff as well, in terms of equipping them to work from home and delivering the essential services. As one of the non-deliverables is obviously to continue dealing with claims. So I think that is one of the basic things that the insurance company must concentrate on. And also to assist their staff financially and health-wise, in other words, allowing them to work from home, continuing to pay their salaries if and when it's possible and as long as possible. This will obviously then also depend on the individual circumstances of individual member companies. But over and above the basics, we have also had a task team working really non-stop to look at how the industry's expertise in terms of resources, knowledge, information systems, etc., can assist in speedily assist, the available funding. I'm talking about the Solidarity Fund, for example, the Small Business Fund, set up by the DTI and Small Business Development Departments, in speedily distributing those funds. I think that Lizelle mentioned that a small business usually it can only last, for a month. So we think that the distribution of those funds quickly is quite essential. However, obviously we have been offering that kind of assistance to the relevant parties, and those details will still have to be worked out if and when the industry is needed. Just to say that the industry is very willing to assist, and we are exploring ways in which we could do it if it is needed. Secondly, we're also recommending our members, and many of them are already doing this, whether or not they will receive recognition for their efforts, and that is to divert funds from the financial sector code, for example, Consumer Education Fund, CSI or SED funding, supply development funding, as well as even skills development funding that they would have had available and would have had to spend in terms of the financial sector code to assist rather in doing, giving more immediate assistance in the national interest. So we have, for example, applied for recognition of these kind of diversion of funds going forward. But as an industry, we have said, even if it is not recognized, this is what the industry should definitely consider contributing as well. So I know my time is more or less, well, probably more than finished. Just to mention that we're working extremely closely with National Treasury, the FSCA, as well as the PA. And we are contributing to, continuously to what should be deemed as essential services. As you know, these things are evolving all the time. And I'm sorry, my cat is interfering here now. So I'm sorry, but anyway, that's the beauty of working from home. As well as, what kind of regulatory relief could there be, as well as finding ways in terms of, extending the offerings, for example, with trade credit insurance, to assist businesses, and especially smaller businesses, to survive together with government, because clearly this is something that, some of these things we need to do together. So we are constantly exploring those. We have weekly meetings with the regulators and National Treasury. We've also applied for a
Sorry, Vivian, I don't mean to be rude.
Are we
but,
finished?
Yes, thank you. I'm going to have to call your cat back in.
Yes, okay. Thank you, Simon. I'm going to finish now by saying, as I said in the beginning, we find ourselves in a moment in history in the making. The things that we have been doing at SAIA cannot be explained in 5 to 10 minutes. And thank you very, very much to everybody for their support, and good luck going forward, guys. Everybody, thank you.
Thank you so much, Vivian. Our next speaker, rounding off our trifecta of strong women in the insurance industry, it gives me great pleasure to welcome Thokozile Mahlangu. I think most of you know Thokozile. What you may not know is that she holds an LLB degree and she's got various management and leadership qualifications from UNISA and Gibbs. I don't see Thokozile. Could you put your camera on so that I know you're here? I'll tell you a little bit about the IISA while we wait for Thokozile to find her camera. So the IISA is a non-profit organization. I know most of you have probably attended functions or certainly CPD accredited training sessions sponsored or put together by the IISA. But really, they see to it that the insurance industry is well represented in SA and throughout Africa, and they promote the knowledge and skills sharing in our industry. Thokozile, are you there?
I'm here, Simon.
Ah,
I'm here, Simon.
welcome,
Can you hear
Thokozile.
me?
Yes, I can.
Good morning.
Over to you.
Good morning. Thank you, Simon. You're always so amazing, and thank you for the warm welcome there and an introduction. And a big thank you to Carol and the team for this initiative. It shows support of the new normal. When they approached us to accredit the event, we embraced the initiative. We grabbed it with both hands, and that's why this event is accredited with the 1.5 CPD awards. Through these difficult times, we all had to tap into our creativity and just find ways of doing business differently. At IISA, we first postponed our annual conference, which would have taken place in July this year. We've postponed the 2020 conference to only take place in 2021. We've also moved our face-to-face workshops to online platforms. And we hosted our first online workshop last week. And we had over 70 people registered, which is a great start. And it shows that we are all embracing the new normal. Insurance is an essential service. So is continuing professional development. We've assisted some of our professional members who provide essential services within the insurance space by confirming their professional designation so they can carry on providing the services, especially SMEs. We will be rolling out more online platforms where we'll be giving continuing professional development workshops, talks, panel discussions. So keep a lookout for that. Not only is it a way of one to get the CPD hours or increase their CPD hours, but the importance is on the learning. As we've seen this morning, Graham and Justin have provided amazing insights, and I, for one, have definitely learned a lot from it. And this is what we really need to continue to embrace as we move forward. Furthermore, although the regulator has extended their CPD deadline, the membership deadline has not been amended. It still remains as the end of May. Our CPD team is on call at any point, an email, online. We are there to support and assist you. And continuing professional development is really important, not to wait for the deadline, but to rather do it now, because it is continuing professional development. It's not a compliance matter where we just tick the box. So I'd really encourage everyone to make sure that they take advantage of the online platforms that we will be making available. We have an e-learning platform. If you visit our website, you will find a number of videos from last year's conferences and the workshops that we'll be rolling out. We'll be videoizing them and putting them on the e-learning platform. It's an opportunity again for one to continue enhancing their knowledge, learning through these difficult times. Remote working and virtual training have become the new normal. Let's embrace where we're at and maximize the opportunities that are available to us despite the challenging times. Remain innovative, keep safe, and stay blessed. Thank you.
Thank you so much, Thokozile. Wonderful talk. Carl Nolte, are you around?
I am indeed, Simon.
I can't see you though.
I've turned my video on, so you should be able to see me. But as long as we can see you, you're much better looking. That's fine. As long as you can hear me.
Thank you. I agree with you, though. Carl, you wanted to chat about some of the business tools we're using in this, certainly in the lockdown, and I suppose what we might find after we go back to work.
Yeah, I'm really interested, Simon, to get some thoughts from you that might be able to help the people that are on this session today, because you've been doing this for many years, using online tools to run a business. Others are late to the party, but I know with some of the things that I'm involved in, we're using obviously Zoom, Microsoft Teams, things like Slack channels, etc. And some of us sometimes forget to turn off the camera and are there in our pajamas, or in Ronald's case, naked. And so, yeah, maybe you can just share some of the stuff that you're using. And I'd like to kick it off by, for me, the main thing is not just during lockdown, but when you do work from home, is that you have a separate workspace, which is not always easy for people. But I think it's vital to have that separate space and a routine that you go to a workspace, even in your own house.
No, I agree, Carl. I mean, I've got this I'm fortunate to have an office at home, because I've been spending basically half of my working time prior to the lockdown commuting between Joburg and Cape Town. So I needed a space. It definitely helps. I don't know if you've noticed this, but it just seems like I feel like I've been working harder since we went into lockdown. I feel like I'm having more meetings. It was a lot easier for me when I was the one working from home and everyone else was in the office, because they would, of course, have their meetings and whatnot and dial me in when I was needed. But I can literally go from one session straight into the other. And many people that I've spoken to say the same thing. And I did a little bit of research, and I found there's a little bit of psychology behind this fatigue. And that is apparently, talking on the phone is different because you can't see the other person. But when you're actually seeing somebody on the screen, your body is kind of grasping for those visual clues, those non-verbal clues that you would normally have in a face-to-face meeting. And so the interactions tend to be a lot more tiring and exhausting. I'm obviously very grateful that we have, video conferencing facilities. It would be very difficult to do what we've been doing over the last few weeks. But I just thought it was worth mentioning, that there's this kind of fatigue associated with it. And I know that it's just not me. I think a lot of other people out there might be experiencing the same thing.
Yeah, I agree with that, Simon. And again, I think that's why it's important to have shutdown and to not be fully connected and available the whole time, to also have set working times rather than just set working space, and really fill the rest of your life with other aspects as well. I think it's really important. What kind of tools do you mainly use, though? I mean, do you use Zoom a lot? How do you find it?
So, being part of the Santam and Sanlam group, we can't really just kind of use whatever tool we feel like. There are obviously certain requirements. The one that we were using prior to lockdown is something called WebEx, which is made by Cisco Systems. I didn't find it that user-friendly, and in fact, I often found that if I was inviting someone from outside the company to a meeting, that they wouldn't be able to connect. So it was great for internal comms, but not so good for external. I found Zoom to be the most user-friendly, but of course, with the news that was breaking a week or so ago, with there being some doubt about the security, I know that a lot of businesses are kind of looking at that and going, okay, is this as safe as we thought it was? My preferred tool for communicating internally is Microsoft Teams. And in fact, even external, because most people are using Outlook. So I find that it's really, really useful. It's easy to connect. It's pretty easy to schedule a meeting. But usability, user-friendliness, I'd still say Zoom is probably my favorite.
Maybe just on the Microsoft Teams, because I use Zoom a lot, and the school that I'm involved in uses Microsoft Teams, and I was very nervous about shifting over to it and think I needed a major setup, and it was very easy. to get connected and to use that. So I think that's very worthwhile. I don't know if you guys have come across a tool called Slack, but that's something we use at Easy Equities. And it's a really useful way to stay in touch and make sure everything is in one place, creating different channels, rather than sending hundreds and thousands of emails.
Is that more that more messaging, or can you use that? Does it do video as well?
Yeah, it's messaging, and so you would create a channel for a particular theme where everybody who needs to be on that channel are there. So it's a very handy tool. What are your thoughts in terms of some of what Justin was talking about, professionally as well, in terms of cyber cover? Has our country got enough capacity to cope with the infrastructure? I mean, can we cope with the excess demand now on our system?
Look, I mean, in our group, it was a challenge because there's thousands and thousands of people, and our virtual private networks, VPNs that you have to use to access the network, and various other tools, those were not meant to handle 7,000 users simultaneously in the company. So we did find that we had some connection issues in the first few days, maybe the first week. So of course that really got me thinking about the cyber angle, because I remember when we were struggling with connectivity, there were certainly some conversations happening, certainly not with the IT security guys, but lower down the ladder where the users are, where people were going, can we not just not use this VPN? Why do we need this? Can we not make it easier for people to operate on the system, receive their email? And of course, that's what cyber criminals are relying on, that we become inconvenienced to the point that we lower our guard, and I see it here at home, not with cybersecurity, but I'll often not activate our alarm when I go out because it's a pain and it's a hassle, and I forget to switch it off when I come back into the house. And cybersecurity is like that too. So I think we need to make sure we don't get complacent and we don't try and find workarounds that compromise security. And I know there are a lot of companies out there that are doing that. And I think that's one of the reasons why Zoom came under fire, because the security was really not robust enough. They were dealing with 10 million users a day, and they shot up to 200 million overnight. So there is a lesson in that, that you can't just sit back. And in fact, one needs to kind of up your awareness in these times of crisis rather than going in the other direction. I think South Africa's done extremely well from a connectivity point of view. From what I'm hearing and what I'm seeing on this platform now, everybody is able to operate remotely. That is in an industry that facilitates remote working.
Yeah, absolutely. I also think we've done a good job. We were moving a small call center, so it's only about 40 people, but getting all the technology that we needed. And it just showed me the resilience also of South Africans, because the people in this call center don't often have the luxury of having a nice office space at home. And having created their spaces for themselves and servicing clients throughout this crisis, for me, is a big demonstration of why we will come through this together, because we're a resilient nation. We do need to be pushed to the bloody edge before we come together, but when we're pushed, we do. So maybe
but
just
don't you feel like, sorry, Carl, this whole the COVID pandemic for me just felt like someone was able to press a pretty valuable reset button. Because we were dealing with a lot of stuff already, and we got downgraded while this was happening. So it almost seemed like if there was a silver lining, it might be that, that we could somehow just restart and move forward.
Yeah, absolutely. So Simon, we've got a couple of questions on the chat group, and I'll respond to some of them. I saw Catherine asked about MS and Slack, so I'll respond to that in the chat after this. But just also a slight tangent to this that I'm interested to get your thoughts on 4G, 5G, and the debate around that. In your experience, your world, the stuff that you're seeing, what do we need to know, worry about, opportunities?
5G is not to blame for for COVID-19. That I can tell you, because I know somebody said that. Neither is Bill Gates or anybody else that's associated with Microsoft. I'm excited about 5G. I think it will open up a a whole world of possibilities, particularly with the Internet of Things. I believe it's going to be the next revolution of things. It may still be some time before we can sort of fully avail ourselves of those tools. But yeah, look, connectivity is key. I've got quite a fast fiber line here at home. And I'll tell you, when I go into our office, sometimes I'll notice that the line is still running fast, but it's only running at 20 megs or something. And I notice the difference. And apparently on 5G, which I've not played with yet, it's like, I mean, you're talking about, downloading gigabytes of data within seconds. So I think it'll be that same quantum leap when we start to see that.
Just a little bit more about tools and some other opportunities for people listening. So we all know Netflix and channels like that, but I'm interested if you explored any of the free, if I can call it, art stuff that's being offered. So we had the Globe in London offering some of their theatre pieces, many others. There's a service called Marquee.tv, which costs R100 a month.
Wow.
And you get fantastic theatre, dance, music on that. What are you using to keep entertained legally and family kind of entertainment that you can share?
What time of day are we talking about, Carl? So, I mean, I could actually kick myself because I was one of those people that went, you know what, we need to not have a DSTV subscription and we'll just do streaming, because DSTV is like super expensive at $1,000 or whatever. And I wasn't watching a lot of sport at the time, and it was really only the news channels I was going to miss out on. But I've since ended up spending more on all the streaming channels than what I was spending on DSTV. So here at home, we have a VPN, so we can access some of the American channels. So we've got Netflix, Hulu, Disney Plus, we've got Apple Plus, and Amazon Prime. And we obviously can't watch any of that. I haven't watched any of the art channels that you're talking about, Carl. Is that live performances that are being shown, or?
No, it's also pre-recorded, sort of a very much a curated inventory. Okay. Yeah, and there Matthew's just shared with us the Wild Earth Safari. I mean, it's been fantastic, and Justin also briefly mentioned just people being really innovative in terms of that. So I think we're going to see some other interesting content that's coming to the fore, because we're going to have to cut through the clutter. There is so much available, and it might also be worthwhile from an insurance perspective. How are you going to cut through the clutter and what you're offering people?
Absolutely. I also I'm a fan of creating content. So just before the lockdown, I kind of rushed out and I bought all of this kind of podcasting equipment. So I'm going to create some content. I'm not just going to be watching it. So yeah, I think that's also something where you can kind of keep yourself busy in the quiet hours.
Good luck. We look forward to hearing that. So thanks very much. Simon, if you're happy, we're going to move on to Leah for our entertainment. I'm going to ask Leah a couple of questions, and then she's going to perform a track or two. So we're going to give you a break for a couple of minutes, and then after Leah, you'll be back on with Marsh and ENS, if that's okay with you.
That is perfect. Thank you.
Great. So now this is the complicated part of the technology to see if it works. And we're going to hopefully be joined by Leah, one of my favorite South African artists, not only because I think she's super talented, but also because she's a super nice person. And when we contacted Leah, she very readily agreed to join us and be part of the session. And I'm really appreciative that she's done that. And to kick off, we're going to ask Leah a couple of questions. So welkom Leah, dis great om jou hier saam met ons te hê.
Baie dankie. Ek figure nog self hierdie ding uit, maar ek dink ons het hom.
Absolutely. So yeah, it's great that you're with us, and I want to kick off by asking you, you've just released a new music video. And how did you manage to do that during lockdown with no PR and stuff? How's that gone?
Ooh, Well, we did have a physical campaign planned, traveling the country, basically seeing a lot of radio stations, going into studio. But then we had to resolve to some, telephonic radio interviews, but which was fine. Luckily, technology is on our side, which is great. I just want to check, everyone can hear me, right? Is it fine?
Yep, we're good.
Lekker. Yeah, so I basically did a lot of telephonic interviews, did some podcasts. I have one today again. And yes, and then obviously YouTube and all of my social media has been flooding with all of my video stuff. So we tried to utilize what we could get, And so far, so good. I'm happy.
Great. Well done. We're also going to be giving away a couple of your CDs later. So thanks very much for that. And I've got a question in the music video. You're pushed on a shopping trolley. How the hell did you keep your balance?
Poor strength. It was tough, I promise you. But I started by sitting in the trolley, and then they pulled me with the rope tied to the trolley. And I said to them, listen, guys, I've got this idea. Let me try standing up as if I'm like surfing this trolley. And they were all quite skeptical. The director said, what if you fall? What if you hurt yourself? And I said, let's do this really slowly and let's just try it. Try something new, And I got into that trolley, and as soon as I got comfortable, I just clenched my core. And then literally, when the first shot was done, I said, let's do it again. I'm loving this. So I was surfing.
You look like a pro surfer, so well done.
Thank you.
So tell me, you and your husband and the dogs, what are you doing to keep fit during lockdown?
Oh, that's such a good question. Before lockdown, my husband and I said we are going to be the fittest people ever after this lockdown. We're going to exercise every single day. We've got a really steep driveway, so we've been running up and down the driveway, but not very often, though. Not every day at all. And the fact that Discovery lowered the goal per week for your rewards, that didn't help at all, because now if you only exercise once a week and you get your points and you're like, yay, I'm done for the week. But no. I should be exercising a little bit more. I will be focused from now on, I promise. You just inspired me.
Well, Leah, bye donkey. Jy kan vir ons sing, ek dink 2 tracks, so we're gonna leave it to that. But just again, a huge thank you to you for also being brave enough to do this. So being one of the first artists, you took part in a campaign recently, which was the National Anthem Challenge. There were about 40 or 50 of you that sang in that, and it was a beautiful piece. And now there are about 1,000. I think they're just under 1,000 people that have sent in the video. And so I'm really looking forward to that. But you're always such a passionate South African. I loved how you support the president and his message of staying home. So well done. Thank you very much. And technology, I hope it's on our side. We look forward to your 2 tracks. Thanks very much. Enjoy.
Yeah, thank you. This is definitely my first time doing something like this. But like we said, there's a first time for everything. So I'm going to start off with an Afrikaans song, and then I'll be doing a lovely English medley. So I really hope you enjoy it, and I hope you can hear everything. So kom ons probeer en geniet hom julle hier van my huisie af. Ek was gevind maar verlore. Ek was al hier van tevore. En dit speel weer voor my af, en ek weet hoe dit gaan eindig vanaand. Jy kan maar weer dalk in woorde. Al die praat is nou verbode. Hou my vas en trek my nader, eerder nou as bietjie later vanaand. Is dit die volmaan wat my so ontkant van? Is dit die stille nag wat so soenig van? Gaan ons maar eerder lê. Ek wil saam met jou onder die sterre lê. Is dit die aanhoue wat so ons loop? Is dit die stadse nag wat op lig spinnaar? Gaan ons maar eerder lê. Ek wil saam met jou onder die sterre lê. En as jy die lirieke ken, sing saam. Dit verskyn uit die lere. nou dit komt van adem. Dus ze wilde mij verschuldigen, ze wou jou nooit meer los die gevoel. En ze man maakt mij zo onkant van. Is dit die stille, nou was je zoenen van gewoon ons maar iedereen. Ik wil zo met jou worden die sterren weer. Is dit die aanhouden, wat je almost doet. Is dit die sterkste, als wat goed met dan gewoon ons maar iedereen. Ik wil zo met jou worden sterren weer. In de macht niet achter zijn, niet weet niet waarom te beginnen, ik voel jou. Het was liefde net te oorlijk, wat zal ook al in de ochtend als hij praat met jou. Is dit die volman, wat mij zo omkant van? Is dit die stille, nou wat zo zoelijk? Nou gaan ons maar iedereen. Ik wil zo met jou worden die sterren weer. Is dit die aanhouden, wat je almost doet? Is dit die sterkste, als wat ook lukt, dan gaan ons maar iedereen. Ik wil zo met jou worden die sterren weer. Hey! And of course, we'll be doing a costume change for the next song. Haha. Jullie raar voor die volgende een? Kan ik maar gooien? Okay. Here we go. Everything fine with the sound? Almal kan hoor? Happy, happy? Shana, gaan ons. From my soul, told her I had to go, and I know it ain't pretty when a heart gets broke. Too young to feel this old, watching us both turn cold, and I know it ain't pretty when a heart gets broke. Yeah, I know it ain't pretty when two hearts get broke. Hey! I hope someday we'll sit down together and laugh with each other. But these days, all of our troubles we lay to rest, and we wish we could go back to these days. Ooh, I know. Ooh, I know. Yeah, I know. These days. Ooh, yeah, I know. These days, 3 years of ups and downs, nothing to show for it now. And I know it ain't pretty when the fire burns out, calling me when I'm drunk, remind me of what I've done. And I know it ain't pretty when you're trying to move on, yeah. I hope someday we'll sit down together and laugh with each other about these days. All of our troubles we'll need to rest, and we wish we could go back to these days. Ooh, I know. Ooh, I know. Yeah, I know. Ooh, I know. Yeah, I know. Ooh. These days. For all those times that you rain on my parade, and all the clubs you get in using my name. You think you broke my heart, oh boy, for goodness sake. You think I'm crying out my own, well I ain't. And I didn't want to write a song, cause I didn't want anyone thinking I still care, I don't. But you still hit my phone up, and baby I'll be moving on. And I think it should be something I don't want to hold back. Baby you should know that my mama don't like you and she likes everyone. And I never like to admit that I was wrong. I've been so caught up in my job, didn't see what's going on, but now I know I better sleep in on my own. Cause if you like the way you look that much, oh baby, you should go and love yourself. And if you think that I'm still holding on to something, you should go and love yourself. Cause if you like the way you look that much, oh baby, you should go and love yourself. And if you think that I'm still holding on to something, you should go and love yourself. Bang into the room, I know you want it, bang, bang, all over you. I let you have it, wait a minute, let me take you there. Wait a minute, do ya? Bang, bang, there's on your heart, I know you want it, bang, bang, see that my cool. I let you have it, wait a minute, let me take you there. Wait a minute, do ya? It's flavors in the bottle, it's naked to a barber, it's so me in the battery, when he's not out of reach, different in a pot of blue bottle. Get so good, there's different out, we'll get around, into that good, go, bang, all of this, bang, talking to Queenie, Dominic, coming. It's me, Jesse, and Ari. If they text me, just sorry. Brothers, oh my God, Hardy, they're right up in his Ferrari. Is he hanging, we're banging, phones ringing, he's singing. It ain't karaoke night, but get the mic, cause I'm saying. G to the A, to the N, to the G, to the A, B, to the A. The N to the G to the hey. See anybody going good to you? You need a bad word for your mind. Woo! Bang, bang into the room. I know you want it. Bang, bang all over you. I let you have it. Wait a minute, let me take you there. Wait a minute, do ya? Oh yeah. Woo! That was so fun. Hey.
Well done, Leah. I could see a paar comments gestuurd, and we've had some great interaction from the audience. So thanks to Red Barker, who said it was awesome. I hope he got his family in to listen. And
We've
thanks,
had
by
some
the way,
great dancing happening too.
Yeah, and lots of support. So thanks very much. People saying your vocals are great. You don't even need the music.
Thank you.
But well
thank
done.
You. I had such a good time. Thanks.
And I mean, you are such a pro, so you are making it look so easy. But I just want to say again that many artists would not have the guts to do what you have just done, to put yourself out there, and you've done it amazingly. So again, apart from being a brilliant musician and a passionate South African, your bravery and go-getting attitude's brilliant. So baie dankie, Leah.
Hey, dis anders se tye so ons moet doen wat ons moet doen. So baie dankie, dit was 'n voorreg. Ek waardeer dit so baie.
Great. Well, geniet die res van die dag and enjoy some time with your family. Keep well.
Thank you so much. Take care, everyone. Thank you.
Bye-bye.
Bye.
Bye.
So we're very fortunate that our co-sponsors of today, who are Marsh have given us two of their best speakers. We've got Sashni Singh, who's the cyber risk business lead of Marsh Africa. She's got a BCom and is a certified chief information officer. And then we have Justin Keevy, who's the divisional executive of commercial crime and cyber risk broking and advisory practice. And Justin has a BCom honors degree. Justin and I actually go way back. We used to work together at Camag some years ago. Really looking forward to what you both have to say about this, environment that none of us have actually been in before. Over to you, Justin and Sashni.
Hi, everyone. Good afternoon, and thank you so much for this opportunity to present to you virtually on how the cyber threat landscape has changed, with the COVID pandemic. So I just want to share my screen quickly. So as you know, this virus is spreading across, every continent. It's absolutely clear, that the world of tomorrow is going to be very, very different. So I want to start off with some statistics that are quite alarming. So the first one being the coronavirus has generated the highest volume of cyber attacks recorded in years. There's been a 400% increase in phishing attacks. Hackers have basically hit 300,000 plus devices in South Africa in 1 week when people started to work from home. And the graph alongside basically depicts that. 34% of South African computers may be at risk, and that's because of unsupported software and outdated operating systems. More than 4,000 coronavirus-related websites have been created since January. 3% have already been recorded as malicious and 5% as suspect. There's been fake application and domains that, such as Zoom and Google Classroom, that have also been affected. So, this has been basically the perfect storm for cyber criminals. And I just want to share some recent cyber scams. I'm sure you've all seen, the COVID-19 map basically floating around. So hackers are now using these to spread malware and basically steal, personal information and sensitive data. There's been fabricated World Health Organization recommendations, basically claiming things like, the virus is now airborne. There's been a confirmed case in the victim's vicinity, and you just need to click on the attachment, to basically view safety precautions, which is basically malware. Then there's been claims that the US and the Chinese governments have been covering up details for the vaccine, and, obviously interesting to click on. The Marriott did actually suffer a breach about a year or two ago. And now hackers are now exploiting that to say that there's been another security breach. And then basically, again, there's been coronavirus websites that have been created that hackers are using as bait. And then the last one, or rather not the last, but just one of those, is hackers beginning to exploit Zoom. So just some information about Zoom itself. The number of active users per day has increased from 10 million to 200 million just over March and April. And Zoom is not just used for, corporate meetings. It's also used for, conferences like this, but also personal conversations. So there's exercise, workout, training sessions, virtual yoga sessions. We just had Leah now perform virtually as well. So there's many different activities that Zoom is currently being used for. And at the same time, cyber criminals, are using this as another ground to exploit. So some of the recent security issues that have come to light regarding Zoom is that end-to-end security was not entirely true. And there's currently a class action suit against Zoom at this point in time. Intruders have been calling in and projecting inappropriate images. There's been information leaked on Facebook. There's been links that's basically created to steal Windows credentials. There's speed up software, that you can install on your machine, but that ends up being malware. And there's vulnerabilities for like Mac versions where it allows the attacker to actually gain control of your computer and access your camera and your microphones. So, some controls to actually think about at this point is make sure that you have a password for every Zoom meeting, make sure that you have updated software, and just be careful of malicious links that are going around. And one way to actually check is just, hover your mouse over the link, and that will tell you where it's redirecting you to. So if we look at, how companies have now adapted to working from home, they've basically changed, certain settings. So they've enabled things like remote access for third parties. They've given permission to bring desktops, computers home to employees' homes. They've given permission for personal computers, disabling security controls such as multi-factor and double-factor authentication, which they're basically relaxing, just to get everyone up and running. And then, as mentioned, using video conferencing facilities such as Zoom. And many security teams are now struggling to manage these cyber risks at a distance. And some of the challenges that they're now facing are things like capacity, so lack of bandwidth, service provider issues, device licenses that are getting expired, help desk overload with the number of calls being logged, difficulty with less visibility, variations and exceptions. So as I mentioned, the relaxing of authentication, manual processes that now have to be done remotely, response and remediation that are now have to be done remotely, and that goes hand in hand with BCP viability. Then the human factor, people are now more vulnerable at this stage. There's a work-life blur. So in an office situation, you'd think twice before going onto a website that wasn't business related. But what happens when you're at home? Then insider activity, with many organizations implementing salary cuts and, forced leave and unpaid leave, there's bound to be, a bunch of disgruntled employees who may be tempted to engage in malicious activities. So what are some of the cyber risks that have become more relevant during this remote working period? The leak of confidential information, which is critical, manipulation of data, unauthorized access, theft or impersonation, malware infection, and that could come from, the numerous phishing emails, interception of communication, as mentioned, things like Zoom, availability, and denial of service attacks through ransomware. And the key question to ask is, has your organization performed a cyber risk assessment for remote working? Have they actually, put together the relevant controls that are important, during this period? So some of those controls, and I'll just run through it very quickly, is awareness and training. Awareness is, obviously key. People or employees are now in pandemic panic at the moment. And, you need to be confident that your employees are not going to click on a link tomorrow that basically says the number of coronavirus cases have increased from 2,000 odd to 10,000 overnight. Many employees would just without thinking, click on that link. So awareness is critical during this period. Response to cyber incidents. So do we have an incident response plan? How does it basically match to your business continuity plan? And can you activate this remotely, and does it actually work? Then monitoring of security events. So the number of security cyber events have obviously increased tenfold over this period. Is there actually controls of continuous monitoring in place? Vulnerability management. Are you doing things like penetration tests and vulnerability scans, regular patching to make sure that the most up-to-date software is in your environment? Then access management, VPNs, multi-factor authentication, make sure that they are still in place. Workstation and mobile devices, make sure that the security settings are in line with your current policies. And security architecture, are you protecting your perimeter? Are there firewalls in place, for remote connection components, etc.? And I'd like to just leave you with 3 key takeaway points. So the COVID crisis is likely to stay with us for a while. And, a risk assessment for teleworking is actually key to ensure that we are working safely. Reinforcing cybersecurity awareness is key to limiting cyber attacks. And, adapting your disaster recovery plans to your current operational context with an aim to initiate a plan that caters for the worst case scenario is critical. So I'm now going to hand you over to my co-presenter, Justin, who will give you a broker's perspective.
Let me just get out of the light there. Hello, everyone. Thanks, Simon. That was a nice intro. It's nice to see you again. Always a pleasure. I'm trying to find a place where I don't have so much light. So, Sasha, are you sharing that screen? I think, eh? So what I want to just touch on, I think I've only got about, I think between 5 and 7 minutes. Is firstly, I'd like to talk about silent cyber, because at Marsh, we've had a huge influx of our clients inquiring as to whether they can claim their business interruption losses and increased costs of working out of their first-party property and assets policies, as well as under their business interruption policy under their cyber. So currently the response, if you've been following what they call silent cyber, is that it's a phenomenon where by traditional policies underwritten and drafted in a time where cyber risk didn't pose necessarily a big threat or did not exist, so in the early 90s or late 80s, and by the default of the wording, you could potentially cover cyber exposures within particularly assets policies, general liability, professional indemnity, commercial crime, and marine policies. So what happened in the mid last year, in June last year, Lloyd's of London, the regulatory body, issued a notice to all of their syndicates saying by the 1st of January this year, in 2020, you either have to affirm coverage for cyber events, or you have to specifically exclude cyber exposures from first-party property policies. So what we've seen in that market is that we've had 4 exclusions come through into the property space. It basically starts out by offering cyber coverage as a result of an explosion, as well as reconstitution of data. And then it goes all the way through to the last one, the 4th one, which basically excludes all cyber exposure arising out of a property policy. What's important to remember in a property policy from a business interruption perspective is that those policies are generally triggered from a physical damage and then resultant business interruption whereby the machines or their physical asset is damaged and cannot be operated. It doesn't necessarily look at non-damage business interruption as a result of those events. So we see that coming through in the market. It has filtered through into the South African space. So a lot of these South African assets insurers are specifically excluding cyber exposure. Underwriters would rather house that exposure under specific policy where the intent is aligned in terms of covering specific exposures, where it's underwritten correctly, and where it's priced accordingly in terms of deductibles and premiums to cover such exposures. So we've definitely seen a move towards companies buying standalone and comprehensive cyber policy to address those issues. And obviously now with COVID, we see a huge increase in demand for companies. Not necessarily that we've experienced an increase in claims yet, but obviously there's a huge increase in threat vectors that was taking through. If you look at this beautiful triangular table on the screen, as you can see, it took me hours to make this in my pajamas. I think there's a bit of a misconception in the South African market in terms of what are we intending to cover from a cyber policy and the insurance side. So if you think about any loss that can happen to a company or a business, or even an individual as a result of operating a computer network and system, there's only 3 types of losses. So you can have a direct financial loss. In terms of law and case law, a direct financial loss refers to loss of money and property. Generally in a cyber sense, it's money that is stolen. So it can either be a third party and authorized access to your system, whereby you have malware or something like that skims accounts or leaks financial information that results in a direct financial loss. It could also be employees that log into the computer system, transfer money out of the system. So generally, we look to house direct financial loss under what they call a commercial crime policy. So a commercial crime policy does cover employee dishonesty, it covers computer fraud, specifically from a direct financial loss perspective, so the loss of money and property, covers other things such as physical extortion, fraudulent transfer instructions, and that type of thing. So although we do have some insurers in South Africa looking to offer this cover and sublimit it, it's still the most specific policy to respond when there's money stolen as a result of using a computer system, whether it's third-party criminals or employees. What we really look to house under cyber risk insurance policy is what they call first-party costs and third-party liability. So those are the other consequential type losses that can occur outside of loss of money out of your account or money and property to which you are responsible. If you think of the legal fraternity is always in the fire line and threat in terms of fake precedents and external fraud and social engineering, whereby they have requests to transfer money to fictitious accounts, trust accounts, but they act on it based on the fact that they believe it to be genuine, although it is a fictitious request. So we have a lot of those claims. Again, that falls under commercial crime. Sasha, if you just go to the next slide, please. Okay, when we're looking at the first-party costs and legal liability, there's generally 6 insuring agreements or 6 exposures. They can be called different things. Different insurers structure their policies in different ways. But ultimately, the first-party cost is instant response. And these are the invoices you receive by employing specialist service providers to firstly identify, contain, and restore data. Often the case in the majority of claims that we have across our book is ransomware. So ransomware, business email compromise. So malware, we had actually one client where they didn't pay in December, but if they had to pay the Bitcoin demand amount, it was over 960 million rand. Obviously that's not plausible to pay that amount of money. You might as well start from scratch in terms of your IT infrastructure. But yes, the quantums can be quite high. So in the event of instant response, it's IT forensics. Firstly, what you want to do is verify, particularly in ransomware demands. You don't want to just get a demand coming through into your network and pay immediately. You first want to go through the logs. You want to go through all the information to see that information has been compromised. Often the case is that it's a blanket attack and they don't actually specifically have your information. And you don't want to just pay immediately. If you do pay immediately, what we've seen is that you definitely go onto a different list. It may not be immediately, but you become a very good customer, and you tend to, in the next 18 to 24 months, get some more activity in that space. So you don't want to be too bullish in terms of paying. The second one is legal. So even though in South Africa we've got no legal requirement to notify anyone, we don't have to notify any information regulator, any government body yet, none of our customers. Some companies notify on behalf from a corporate governance perspective, not necessarily to comply with the law. But if you are trading across borders and your clients are trading across borders, you may have notification obligations under different laws pertaining to personal data and privacy, such as GDPR and the likes of the US. If you look at GDPR, from the date of the incident, you have 72 hours to actually notify that. I haven't seen the latest stats, but it's still a developing space, those fines. I think they've levied about 32,000 fines to date. None have been paid. Some of them are very large. If you look at Marriott, it's almost $100 million, British Airways. So they are being contested. And that precedent and case law that comes out of that will have a huge effect on us down here, particularly when we have clients that are transacting across borders. You can be subject to international privacy data laws. And notify that for you. And then there's also PR services in terms of minimizing reputational damage, such as social media campaigns and the like, and the instant response. So those are the invoices that you would receive anyway, because as soon as something happens on your system, you may have a brownout, not necessarily a blackout, but your systems or operations may be operating at 20% of capacity. You have to respond. And if you don't have those SLAs in place or that capability in-house, you've got to outsource it. And that's where the huge amount of value in this policy is that having the insurer sign up these third-party specialists for your disposal whenever needed. If you're a high transactional business and you have third parties, professionals working on your system, it generally leads to system downtime and unavailability and therefore loss of business income, so network interruption or business interruption. Again, this is for non-damage events. Often the case is in cyber that you've got some sort of threat that infiltrates your server, the server goes down, there's no physical damage to the server, and it doesn't need to be replaced, it just needs to be reconfigured. In that sense, your normal business interruption policy, as I started off mentioning, silent cyber, will not be covered. So we specifically look to cover systems and networks business interruption under the cyber policy. It looks to top up your revenue to where you were prior to the event, as well as any additional costs of working. So any additional expenses that surpass your expense run or fall wide of your normal expense run, you may need to rent an additional machinery to catch up on production. You may need to pay staff overtime. You may need to rent in laptops because they're all corrupt and they all need to be taken off site to be fixed. Anything that falls wide of that, you can claim that as a resultant quantum in terms of the policy. And then extortion is where we see the majority of our activity. And that's, as I mentioned, it's things such as ransomware. It's a demand for money to release your system integrity or information back to yourselves. So the policy pays firstly for the instant response cost to try and not pay. It's most of the time in public or in company policy, it's against policy to pay ransoms. So often the case we don't actually pay these, and then we manage to restore from the likes of backups and offsite backups and the like. But ultimately, if the business decides that they'd like to pay an extortion amount to a third party, they're most welcome to do that, and they'll claim a refund for that cryptocurrency or that money paid to a third party from the insurer. So all of our claims in South Africa fall under the first party costs. Because we've got no legal requirement to notify anyone, and because we cannot get a fine and penalty currently, because PROPIA hasn't been fully implemented. All of our claims are falling under that. Our average instant response cost across Marsh, our average invoice that we settled last year was 2.7 million. So it is quite expensive when these incidents occur from a cost perspective to get out of that situation and to restore data. But the policy also covers legal liability, so privacy regulatory fines and penalties arising from any breach or non-compliance with international privacy data law. So if you look at GDPR, 4% of global turnover, South Africa, POP-P refers to an administrative fine of 10 million. We can ensure that as insurable by law. POP-P also allows for up to 10 years imprisonment for the responsible officer or senior management. We don't insure against that, it's against public interest. And then it also covers, POP-P also alludes to civil regulatory fines and penalties. So in the event that you have an incident and you report it to the information regulator, and business as usual, you've communicated effectively to your stakeholders, those data subjects, so the individuals whose personal information has been compromised, can still take an action against the business in a civil suit. So the information regulator can kick off a civil regulatory action against the business on behalf of those individuals, even though those individuals aren't disgruntled or they've actually not necessarily lost anything. So there's been no damage claim necessarily, and in that case, you're still defense costs. So we can cover these privacy regulatory fines and penalties. I'm talking about South African context, but the fine could arise on the GDPR. We still don't have any case precedent or case law in terms of this, so it's a bit of a grey area. We'll have to see how that develops. Crisis management costs. If you look at the US in terms of the notification costs and the large claims, if you look at Target, which is about $240 million, about 80% of the large losses that have happened in the Lloyd's market arising out of the US breaches, particularly in 2016, which was a very busy year, their large component is notification costs. So in the US, the information regulator dictates the way in which you notify these people. So if we look at Target, for example, they set up a call center in India and they phone these individuals telling them that the information has been compromised. What also runs the cost up is that when personal information is compromised, it's not a quick phone call. Generally, people want to know exactly what happened to their information, and what is the business going to do proactively going forward to protect their personal information. So it does run the cost up. And then there's obviously credit monitoring services. So when this financial information is compromised, almost 100% of the time, it could lead to identity theft, cloning of credit cards and the like, which results in a financial loss to third-party customers or stakeholders. They require the information regulator in the US, and this will be the case in the GDPR, to sign up for credit monitoring services. So as a South African business, we would have to go to the likes of a TransUnion ITC, sign up our database of clients for a minimum of the time that the information regulator tells us to do, generally a minimum of 6 months, to monitor any spiking credit profiles. Obviously, if financial information can lead to opening up fake retail accounts, marriages, all that type of thing. So that's another cost that would have to be borne there. But again, we don't have that imposed on us just yet. We also cover digital media and multimedia, so any liability arising out of marketing and advertising efforts, lots of social media. If a company's got a very large social media presence, do a lot of play a lot of that space. Any defamation, any copyright infringements and the like, that's also covered under that. We haven't had any claims in South Africa to that effect yet, where policy has responded. And then the last one that it covers, which is actually in the B1, there's damage claims. So if you have financial loss in South African law, you have to be able to quantify your damage claim to be successful in the court. So often the cases are information, as we sit here right now, has been compromised in many different sources of many different companies, but we're not actually suffering any loss, and there's no requirement for them to notify us of this. If you look at the banks, they generally report their breaches to the Reserve Bank, but that's more from a corporate governance and to stay on the good side of the Reserve Bank. So we as South Africans, we don't have necessarily lose any money or have any damage claim to claim from these companies right now. I think when Poppy is fully implemented, we'll be more aware because we'll be notified of these incidents that occur. But ultimately, if you had an incident on your system that resulted in fictitious transactions going off your customers' accounts, say 20,000 Rand per customer or employees, and they hold you liable for that, the policy can respond to pay for those defense costs and ultimately the damage claim. So to top up those 20,000 Rand on each account if it is found that you are liable. So I think I'm out of time. I'm just going to leave it there. And that's it. And then we'll hang around for the Q&A at the end. Thank you.
Thanks, Justin and Sashni. That was very informative. We're just a little bit behind schedule, so I'm going to move swiftly along. Our next speakers are from ENS, and we've got Matthew Morrison and Rob Scott. They are both lawyers and directors at ENS, and they'll be taking us through pandemics, business interruption, and telling us what the law says about those things. Welcome, gents.
Thanks very much, Simon, and thanks to Carl and the CN&CO team for inviting us to speak. I've chosen a particular topic that might be of interest to everybody. It's supervening impossibility of performance in contract, and in particular the common law position on that. So I'm going to spend a few minutes dealing with that, and then Rob is going to talk about business interruption generally and some emerging themes. So one of the questions we're getting from clients is, what happens if I can't fulfill my contractual obligations because of the current state of affairs? And I'm using state of affairs broadly because, you know, within that we've got lockdown, we've got the response to that, and it's quite circumstantial each case. But that's where the common law of supervening impossibility comes in, and it's relevant to all contracts. So we thought it'd be useful to just do a short recap on that. Just a note that whilst the common law principles are common to most contracts, there's a few exceptions. Sale and lease have their own peculiarities, and each case is going to have to be analysed on its merits because the facts are not always common to, the principles are common, but the facts differ. So for example, lockdown will mean one thing to one business, which is not an essential service, whereas it will mean a completely different thing to some businesses that are essential services and either can work or are obliged to, in fact, carry on during this time, for example, broadcasters. So the one area that got a lot of press up front was the landlord-tenant arrangement. But as I say, the principles are common to all contracts, including insurance contracts. So just by way of background, the basic rule in South African law is that the parties will be held to their promises, but our law does make exceptions and will consider a party not to be in breach where contract becomes unlawful or otherwise objectively impossible to perform, and this is known as supervening impossibility of performance. And in South African law, if a contract does not contain an express term dealing with what happens on impossibility, then the common law principles will apply. So what are those principles? In essence, the law provides that if performance becomes objectively impossible, it's not due to the fault of the non-performing party, and it's as a result of an unavoidable event, then that party won't be considered to be in breach, and they'll be released from their obligations. And it is important just to note at the outset, if you are already in breach of your contractual obligations at the point in time when the impossibility arises, you forfeit the right to rely on the common law principles and be released from your obligations. And in other words, you must come into the event with clean hands. But if you're in breach, then you can't rely on these principles. So there's two main requirements in order to rely on, for supervening impossibility principles to apply. And the first of those is that the performance must be objectively impossible. In other words, either physically or legally impossible, and no other party can tender the agreed performance. What's important is it's not sufficient if only that particular contracting party can't perform, or if the performance has become just difficult or expensive. That's a subjective impossibility, and that will not meet the criteria. The impossibility must also be unavoidable by a reasonable person. And this means the impossibility must not have been reasonably foreseen, and I'll come back to that in a minute, nor due to the fault of that particular party. It must be an event that's objectively beyond that party's control. Just on foreseeability, I think I can see some case law developing there about what is and what isn't reasonably foreseeable in the current circumstances. Particularly, I think epidemics and pandemics have been around for a while. They're already exclusions in insurance policies dealing with these things. So it shows you there is an element of foreseeability. However, whether anyone could have predicted that half the globe, the majority of the globe being in lockdown, and the type of response that we've seen will be an interesting debate that will occur going forward. So the consequence of supervening impossibility is limited at common law, is limited to, a termination of the contract or an extinction of certain obligations under the contract. It doesn't deal with restoring parties to their particular position they were in before the event occurred. So if, for example, you have paid and the impossibility event intervenes and you haven't received your performance, you'll have to bring a separate action, an enrichment action, to recover your payment. And damages don't arise, the right to claim damages don't arise from the common law principles. It makes sense if the law treats someone as not being in breach, then you obviously can't claim damages for that against that person. So there's just two aspects of impossibility that I want to go into a bit further. That's partial impossibility and temporary impossibility. With partial impossibility, for example, you might have a contract where the obligations are divisible. So I think, for example, an offtake agreement where for an objective reason you can't produce half of what you said you would, those obligations would be divisible versus indivisible obligations where it's a single payment and a single performance from another person. If they're not divisible, then the contract is terminated. If they are divisible, then the creditor can elect whether to accept the reduced performance in return for a prorated reduced payment on their part. And then on temporary impossibility, if the performance becomes temporarily impossible, lockdown is a good example of that. We're all hoping it's limited to 5 weeks, but even when it releases, as Graham was mentioning earlier, that gradual release that we'll probably go into, it should be a temporary event, but then you've got to look at how long is the contract between the parties. If you had a 30-day agreement and it fell in the middle of lockdown, then it lived for the whole agreement. If it was a 5-year agreement and lockdown is 5 weeks, then it would be seen as temporary. And you can only cancel at the election of the creditor again if that impossibility endures for an unreasonable period of time. And what is unreasonable? Well, again, it would be determined by the facts of a particular case. So that's really a snapshot of the common law on supervening impossibility. Just to touch briefly on that applies when the contract itself doesn't deal with the impossibility event. Oftentimes it does, and parties will regulate their position in the contract, and the label given to that is very often a force majeure clause. And the parties will either alter some or all of the common law position. A force majeure is a term derived from French law, and on its in and of itself, it's a French derived term. It doesn't have a recognized or established meaning in South African law. The Latin derivatives of vis major and casus fortuitus do, but force majeure doesn't. So it's entirely contractual in nature, which then obviously means if you have one of those clauses in a particular contract dealing with it, you've got to scrutinize that clause and see what the effect is. And it's purely a question of contractual interpretation. Now, typically, a force majeure clause will deal with either suspending or delaying performance, or they will sometimes avoid the contract being terminated automatically as a result of the common law principles, because that's often not desirable, and you'd rather have an agreed suspension. And of course, they can also allocate risk one way or the other. So one party might take on the risk of impossibility of performance, or it might be shared between the parties. Just a note that those clauses will often contain procedure mechanisms and timelines to be complied with. And if to ensure you don't forfeit whatever rights you may have under those agreements, those would need to be complied with in terms of the agreement to make sure you don't get caught short. Again, on the liability side, as I say, the common law position, no claim for damages, but again, that could be separately regulated in a force majeure clause. So that is a very brief snapshot of the common law position. Just by way of summing up, the common law principles apply to each and every contract, but you need to look at the relevant facts in each case to determine what the consequences will be. And if they are regulated by way of a force majeure clause in a contract, then you'd need to scrutinize that clause carefully to understand the consequences. Thank you. And I'm now going to hand over to Rob to talk about BI. Thanks, Rob.
Hello, everyone, and thank you very much, Matthew. I am Rob Scott. I am a director at ENS Africa. I'm in the dispute resolution department, and I am head of the firm's insurance practice group. This presentation, a short one, is entitled Business Interruption and the Law. I will address the business interruption aspect, but I'm going to go a little bit beyond that in addressing COVID-19 and the insurance scenario generally, more generally, and under the following headings. Firstly, a look at where we are. That will be relative to the short-term industry, and it will have a South African emphasis. Secondly, the expectations of the Financial Sector Conduct Authority. Thirdly, the possible covers. Fourthly, the possible areas of controversy. And then I will end with some thoughts and some takeaways. There is currently a great deal of uncertainty. Are insurers exposed? What are the insurers' exposures? What covers will respond? Perhaps one of the happy insureds out there is the All England Lawn Tennis Club, which will receive a payment of £114 million. This due to Wimbledon being cancelled this year. everything's being cancelled, of course. This is in terms of a specific pandemic cover. So, where are we? What is happening at the present time? The insurers are obviously looking at their policy wordings. They are looking at their potential exposures. They are looking at their reinsurance placements. They are making their own assessments. What are the insureds doing? Similarly, looking at their policy covers. How will their covers respond? They are, of course, looking at local policies, and many amongst the larger corporations are looking at group covers, group global coverages, looking at master policies and differences in conditions policies. It is too early to determine how insurers will respond to the varying assortment of claims that will be made. It is too early to predict to what extent the insureds will pursue rights under policies. Claims have in the main not yet been made. With that said, it is both interesting and important to note what was said by the Financial Sector Conduct Authority last week in a communication entitled Impact of Coronavirus Expectations on Regulated Entities. The FSCA set out its own main expectations regarding the culture and main responsibilities of financial institutions during this crisis. I'm going to read certain selected passages from the communication. They are, of course, my selection, but I've selected them with context, or in the context of what I'm talking about here, and relative mainly to claims. And please bear with me, I think the document is an important one and should be looked at and considered. The Financial Sector Conduct Authority is aware of the impact of COVID-19 on financial institutions and their customers. The uncertainty that this pandemic is creating exposes the sector to additional conduct risk and the risk that financial institutions will not treat their customers fairly. You'll see here that there is an emphasis on treating customers fairly. It wishes to emphasize that regulated entities should bear in mind the current circumstances and assist their customers with even more empathy, flexibility, and understanding during these difficult times. Again, entities must ensure that all customers are treated fairly during the entire product cycle, from advertising to claims to sales, renewals, and complaints. Then it sets out or outlines the following regarding the culture and main responsibilities of financial institutions, its expectations in this respect. If any major risks have been identified as a result of COVID-19, which could materially impact fair outcomes to customers, the entities should immediately communicate this risk, the impact thereof, and mitigation plans to the authority. It's keeping itself involved. Any changes to current insurance products or the launch of new products directly related to the needs or risks identified in the market should continue to follow the prescribed process as stated in the policyholder protection rules. Then, specifically in relation to claims, the current situation might have an impact on various claims due to time delays for obtaining documents, the ability of assessors to conduct necessary assessments, and third parties required to satisfy the claim, like experts specifically. Where, well, entities must endeavor to avoid delays in settling any claim. Where delay is unavoidable, any time delays must clearly and proactively be communicated to customers. Reasons for the delay or the delays must be given, and expectations must be managed. Entities are also expected to take additional measures to minimize, the impact of delays, and to be as flexible as possible regarding claim requirements in the given circumstances. Any exclusions that are impacted must be clearly communicated to all current and potential policyholders as soon as the impact has been identified by the insurer. There's quite a lot in that. If any new exclusions or requirements are introduced during the period, they must be discussed with the authority, again, keeping itself involved. And again, there should be no delay in any claims payments. So claims must be dealt with quickly, and then when there is a settlement, payments must be made promptly. Communications, this is my final reading from the document. Communication regarding renewals should be clear, and any changes to policies due to the impact of COVID-19 should be highlighted to the policyholder. Then, moving on then to the policies that may respond. There have been a number of publications suggesting that claims are unlikely to be covered by the traditional policies held by most businesses. In my view, I think that this might be too simplistic. Then, turning to the policies, for the purposes of this presentation, I think it's worthwhile separating the policies into two categories. The first being the primary policies, and then the second being other policies or secondary policies. The primary policies are those that may respond to losses caused directly or indirectly by the virus. And here I have in mind the assets all risks policies, which have extensions for contagious and infectious diseases, either by way of extension or because the policies deal with contagious and infectious diseases as a specific defined event. Remember, assets all risks policies giving rise to business interruption have and still are, well, historically, all been claims for business interruption covers been premised on the fact that there is a trigger being property damage. But there are exceptions to this, and the all risks policies have those exceptions, and one of which is in many policies, communicable diseases and contagious and infectious diseases. In other words, requiring no prior property damage. Then we have general liability covers. Bodily injury comes to mind. Event cancellation, travel policies, and group personal accident policies. The secondary policies, what are these? Here we consider what coverage for COVID-19 related losses may be available elsewhere. So what are these policies? So here I have in mind covers such as D&O or directors all risks covers, trade credit, political risk, cyber, and throughput policies, throughput covers. Looking at, and shortly, directors and officers, directors all risks. How will the claims arise? There are any number of possibilities here. A failure to comply with regulations, a failure to make best decisions relative to the COVID virus, a failure to anticipate or put in place measures to deal with COVID. There are any number of possible scenarios. And I think we know from our experience that directors and officers claims generally follow a crisis the making of the claims may be delayed, but they do follow. And then just in relation to cyber, I think cybersecurity issues are heightened due to remote working. And I see just recently in the United States, and it would be the United States, of course, an insurer suing its own law firm for a data breach. That's just very recently. On the political risk front, I have in mind confiscation, decrees, orders, etc., and travel bans. So one needs to bear in mind how those policies, or how the triggers under those other policies may arise in consequence of the virus. Then turning to the next topic, and that's or heading, that's the controversies. So if we were to look through a crystal ball, where would these controversies and arguments play out in relation to the various covers? What are some, perhaps, of the arguments that are likely to ensue? Two things. Firstly, I'm yet to come across a pandemic exclusion in our market. Then, in relation to avian flu, the science at the present time is that it is not an avian flu. COVID-19 is not an avian flu. It is not related to it. It's not a mutant form of it. So avian exclusions at this present time are of no application. Generally, a few other interesting points are exclusion of pollution claims, often found under liability covers, applicable here. In other words, is the virus a pollutant? Parties should bear in mind reverse onus clauses in all risks policies, relative to the proof of exceptions in all risks policies. Then, in relation to legal liability policies, are the policies clear on the exclusion of contractual liability? Turning then to business interruption, a few points. Does the government intervention break the chain of causation? Remember that the government intervention, the lockdown intervention, had as its purpose, and this is in the gazettes, the reducing of the virus's impact by preventing the importation, its importation, and local transmission of the disease. Is a mitigating factor such as this a new cause? There are likely to be some arguments and controversies in that regard. What about the argument that policies were not intended to cover pandemics? And here, if you look at the contagious communicable disease and contagious and infectious disease extensions under certain assets all risks policies, you'll see the radius requirements, the requirement that in order for the risk to trigger, it must, or the virus, not the virus, but the disease, the infectious disease must occur within a certain radius. Does then the fact that there is a pandemic, the fact that the cause arises within the area and without the area, then have some bearing? So I can see that too being a controversial area. In relation to quantification of claims, well, of course, how do you work out the business interruption loss? How do you measure it? Well, that will depend on the construction and interpretation of the policies. And some policies may be clear on how you do that in relation to property damage, but they may not be clear in how you do that relative to the extensions or exceptions under the policy, and in this regard, contagious and infectious or communicable diseases. So if that is the case, how do you deal with that? Point I'm making is the policies may not be clear. They may be ambiguous in this regard. Then I think quite an important aspect here is, and it was actually Matthew's topic, and that is taking action or exercising your rights in terms of force majeure clauses and the common law principle of supervening impossibility. I think it's important to understand that those rights or actions in that regard should be taken not without a look at what covers you have, insurance covers you have, because the actions that you may take in that pure contractual sense may impact upon how your covers respond. So that should be more borne in mind. Don't do those things without looking at what your covers are. Then I think finally, what are the takeaways? And I think what I'm about to say now is for consideration by both insurers and insureds. It's important to identify all policies that might apply. Then, very importantly, what are the notification requirements? What do the policies require in relation to notification? Then timing requirements in relation to the presentation of claims. What must be submitted and within what time frame? On the BI front, I think it's in the interests of all parties, insureds and insurers, that BI claims are presented well. And there are, and perhaps in many respects, parties should consider referring to experts in this regard. And I mean not lawyers, I'm talking about people with an accounting sense and those people who know these types of claims. I think it's important that those claims are presented properly. Then, what are the role of the insurers in crisis management? Policies may provide things in that regard. Then what coverage for preparation do you have? And is there coverage for mitigation costs expended in mitigating claims or losses? And then keep coverage in mind in communications with supply chain partners. And I think that relates back to what I said earlier. In looking at your contractual rights and remedies, look at those in conjunction with what your covers are. And I'm talking now, I suppose, from an insurer's perspective. Those are, but also from an insurer's perspective. Those are important aspects. So then looking through the crystal ball again, I think the insurance industry is in for a busy time. Claims-wise, it's going to be interesting to see how renewals pan out, how insurers deal with renewals, how they deal with the covers, respective covers, and very much looking through the crystal ball. Have we moved, or will COVID-19 have caused us to move into another era, perhaps? Will it bring about new methods of cover or new covers? parametric covers, for instance, for viruses and pandemics. And then just finally, on the business interruption side, the question that I have is why make business interruption predominantly subject to property damage when most risks may not be property, business interruption risks may not be property damage related? Of course, there's an historical aspect there, but are we not moving into changing times? Are we not in changed times already? And finally, it is useful to follow arguments raised in foreign jurisdictions relative to claims and policy covers. That's something that one should keep in mind. And then perhaps also to look at legal cases relating to the SARS epidemic in 2003. But of course, the wordings are all important. They are most often not the same. Policy interpretation is a jurisdictional aspect. And outcomes, coverage is often fact dependent as well. So I thank you all for listening to me, and I leave you with that food for thought. And thank you very much indeed. And I'll hand over now. Thank you. Thanks, everyone.
What I do have the privilege of doing, of course, is announcing that we've got a lucky draw competition. Graham, are you still on the line? Graham Codrington? No, he's left us. Justin, are you there? Justin Naylor?
Yes, Simon, I'm here.
Okay, Justin, we're going to do a lucky draw. So we got 151 people online, and hopefully they've not snuck off in the hope they can earn the points without actually watching the content. We're going to catch them out now, though. So we've got a prize. It's either 1,000 Rand or it's 2,000 Rand, depending on whether they have an Easy Equities account. So pick a number between 1 and 151 without looking at the list.
I will go to 102.
Okay, let's see who that is on my list here.
While you're looking, I was tempted to go for number 2 because I think I was number 2 on the call, and I'm a great fan of Easy Equities, particularly in these times, an online business that is adapted before its time to investing online. So interesting business and really nice price.
Yes, definitely. Okay, if I'm not mistaken, the person that is at number 151 is Stephen Cox. Stephen, are you on the line? Llewellyn, can we chat to Stephen?
Yes, we should be able to. Let me just, you would be able to send a direct chat. So let me chat to him quickly.
Justin, is that your kids?
Yeah, that's my kids in the background. Kids, you're on video in the background. Shame, they've been so good the whole morning. They've been tiptoeing around me being quiet. So,
oh, well done.
Yeah, they've been really great during this time.
Okay, while we are trying to get Stephen Cox on the line there, Llewellyn, can you find him?
Yes,
Stephen,
I'm just trying to quickly get access to contact him.
Okay, while we're doing that, just a reminder, guys, that FIA video is available on the CN&CO Events.com page, so check that out. Thanks again to Marsh and I2 for putting on a great event, or helping to put on a great event. And don't forget that on the 14th of May, we've got another one of these coming up. And if you want to tune in, it'll cost you 200 Rand ex-VAT. I think you'll agree it's a great way to learn. And if you are out there and you're interested in sponsoring one of these events or taking a speaker slot, please submit a contact us form on CN&CO Events.com. And yeah, I just want to thank all of the speakers and especially Leah for putting herself out there and entertaining us for a while. How are we doing with that prize, Llewellyn?
Stephen should be online now. Stephen, can you hear us?
Yeah, I can hear you. Can you hear me?
Yes, we can. Stephen,
yeah,
do you have
Simon.
yeah, how's it going?
Yeah, I'm good. All good. Thanks, and you?
Yeah, good. I'm expecting $500 for making this happen. Don't forget that. Oh shit, my
I'll
mic's on.
share it with you comfortably.
Yeah.
Hey?
Stephen, do you have an Easy Equities account?
Unfortunately, I don't. So yeah, I
You could have signed up in the 2 minutes that it took for us to get hold of you, but you don't. So you win $1,000, and yeah, congratulations. Is there
Great,
like a
man.
crowd
Thank you
drum
very much.
roll or something?
Yeah,
Pleasure.
awesome.
And thank you for tuning in. And yeah, to all of the people that called in today and watched this, we really appreciate your support. Thanks to CN&CO for inviting me to MC this. I had a lot of fun. And yeah, thanks again, all the speakers, really insightful. And thank you to Marsh and I2 for putting this on. Once again, you can go and watch the recording on the CN&COEvents.com page. And it's also available for other people to watch, I believe, for a small fee. And yeah, that's it. That's it from my side.